Hello, everybody. Brian here from quantlabs.net for May 2nd. The big news right now that affects myself, Bloomberg is now charging for their news app for full access and unlimited unlimited access to the Bloomberg TV. So we are now on a 30-day trial as of today, but we'll start paying 30 days out from now. So just putting it out there, all this more info will become more valuable to you as we dig further into what's going on in the markets. Right now there's a lot of activity. I think here in Canada, Toronto, we've been watching oil, gas rise at the pump. So there's been a news article here at RTOinsider.com, ISO NE Northeast Planning Advisory Committee brief 2018 CELT forecast declining load. A new thingamajiggy has come on, enabled more oil to get pumped through and gas, but somehow it has increased the price still. And natural gas rules home heating in Northeast, but we are going into the summer season. This article was posted April 30th, not too long ago. Kylie update highlighted recent market growth, pipeline deployment, and lessons learned from the winter cold snap around the holidays. So utilities have gone up, and more news to come on that. But do be aware that we are seeing it here in Toronto, Canada. Okay, so here at Barron's.com, gauging the Fed's next move. Posted earlier today, 8:41, but what the Fed was going to do, left unchanged. Will leave its target unchanged, makes sense. Short-term interest rate at the end of 2015 has been announced. Rates hike only at meetings with press conferences and publication of revised forecasts. Nothing new there, but their inflation 2% has been hit. So now they're going into a watch mode on inflation. So that's where we're left at with the Fed. Analysis, median expected policy interest rate at the end of 2018, just in between 2.3 and 2.4%. And that's what they're expecting to be at the end of the year. So applied probability distribution for open interest rates of upper bound of Fed policy, 2% or under, 2%, but then you got now 2.5% at a 50% ratio to go higher. Growth bump. Now this is going out to 10-year real interest rate forward. All right, so let's move on to the next article here. Another important area of growth, I think, not being talked about, May 2nd here at NASDAQ.com, and it's provided by Zacks.com. Will bond ETF sustain their April momentum? Now, as you know, I like my charts. There are none. Fixed income world gained immense investor love in April because of volatility in the market. So now they're pouring money into BlackRock. Data from BlackRock, iShares Short Treasury Bond ETF, iShares 20-plus year Treasury ETF, TLT, Core US Aggregate Bond ETF, iShares Floating Rate Bond ETF, with lots of inflow, 1.6 billion and 1.2 billion respectively. And on it goes. I'll leave a link in my membership area for where you can get that data and the link to this article. Okay, iShares. Why floating rate? Okay, so there's another article here. ETF Daily News, why floating rate bonds should be on investors' radar. From Invesco, this is from ETF Daily News. Federal Reserve pushed monetary policies higher. Hike in March. Demand has fallen for short-term credit instruments due to corporate repatriation. Market expect abundant supply of U.S. Treasury bills through 2019, given projected budget deficit. Floating rate bonds, maturities of 1 to 5 years, what differentiates from fixed bond. Interest rate every 1 to 3 months, depending on a reference rate, usually LIBOR, on additional percent amount spread that reflects the liquidity risk. Here we go. 3-month LIBOR has surpassed core inflation and is approaching headline inflation. That's what we saw today. Rising demand has driven the issuance of U.S. corporate floating rate bonds. So this is, as the market turns, this is where the hot money is going. Just so you know. All right, hopefully you'll have that to help you out. Talk to you later.